We've got some news. The U.S. real estate market is heading down, down, down. So what does that mean for you as a rental investor? That's today's video. Let's dive in. Hey there, I'm Clayton Morris. I'm the founder of Morris Invest, and this channel is devoted to helping you overcome those obstacles to get into real estate investing. I'm sure you've heard how great real estate investing is for building long-term wealth, but you don't know where to find properties, you don't know how to get out there and knock on doors. We show you how to do all of it, overcome your fears, and take action to become a real estate investor. And today we've got a bit of news in the marketplace, and it has to do with 2017 and the future of the real estate market. So a new story out this week talking about a weird index that's looked at by Fannie Mae to indicate where we're headed in the real estate market. It's kind of a weird name. I don't even know where they come up with these names. It's called the Fannie Mae Home Purchase Sentiment Index. Basically, it's like a mood indicator, like one of those mood rings from back in the 1970s. So this weird little index from Fannie Mae looks at three key areas of the real estate market. Number one, how expensive properties are. And basically, homeowners think, although not necessarily true, but they think it, that homes are more expensive going into the last 2 months of 2016. They also are making less money. That's the second piece of this trifecta. And number three, they are more concerned about these interest rates that we are going to see hiking up over the next few months. We've heard that from Janet Yellen at the Fed, and I've done a video on that specific issue on Federal Reserve and the interest rate hikes that we can see coming. Now, that's the trend line. So we can probably see fewer home sales happening because people are more concerned about the cost of the houses, they're not making as much money at their jobs, and they're concerned about interest rate hikes. So I always, when I hear a mainstream media story like this, want you to just step back from it. I'm going to train you by the time you're done watching these videos. When you hear a story like this on the nightly news or other places, when you watch the mainstream media, and I know a thing or two about the mainstream media, they are doing those stories from the perspective of Joe homebuyer who is going to live in that home with his family. They are not doing that news story from the perspective of the rental investor like you and me, who own lots of rental properties and depend on cash flow from our tenants in order to build wealth. That's not why they're doing the story. So when you hear one of these stories or you read one of these things in the newspaper, you got to put your rental investing glasses on. So in this situation, I want you to put on your rental investing glasses for a moment. What do you think this means for you as a rental investor? When you hear that Joe homeowner is not buying a house because he's worried that the prices are too high, he's worried about rate hikes from the Federal Reserve, and he's not making as much money. What do you think that means for you as a rental investor, as a person who owns rental property? When I hear a story like this, I say, whew, that's good news for me. That's good news for me. Why? That means fewer people are buying and more people are renting. It also means that the rate hikes that we know are coming from the Federal Reserve also bodes well for me as a rental investor. That means, again, fewer people are going to be buying homes because rates go up, fewer people buy. And the third piece, and it's not the best piece of this puzzle, but that people are not making as much money at their job. I don't want that to be the case, but the truth of the matter is that if I'm a rental investor, then that means they don't have enough money to save for a down payment, and they're going to want to rent. And why shouldn't they be renting from you and me? That's the way I look at news stories like this. So yes, let me get the name of this correct again, is the Fannie Mae Home Purchase Sentiment Index, showing that the U.S. real estate market in 2017 is headed for a bit of a slide. But again, as a rental investor, this to me is good news. So I want you to take all of these stories when we do them here. We've got a whole playlist devoted to real estate news. These are trends that are currently happening in the marketplace to really help you go out there and be a better rental investor. So when we see big stories like this, we will cover them right here on this channel. We publish videos every Monday, Wednesday, and Friday. So please subscribe to the channel. You can do so by hitting that little subscribe button right over here. And make sure when you do, there's a little bell when you subscribe. Turn on the little bell so you'll be notified when a new video is posted. We've got other great videos here that you can check out as well. The whole focus of this channel, though, is to help you overcome those fears, take action, and go out there and become a real estate investor. We'll see you next time, everyone.